Okay, hope everyone had a great weekend. Just want to do a quick mic check. If you guys can hear and see the screen, can someone put a 111 in the chat? If you guys can hear and see the screen, can someone put a 111 in the chat? I just want to make sure the mic is working. Haven't done one of these in a while, so just want to make sure that all you guys can hear. Um, Sorry I had to change the time on you guys, but I have somewhere I need to be at 9 o'clock, so wanted to do this a little bit earlier. Hopefully this doesn't run over, but wanted to talk a little bit more in depth about liquidity. The guys, not the guys, the members that are using the system. I want you to realize that once you get a better understanding of how the market works and how to identify liquidity and how to identify the orders, you'll see that you'll make better choices using the system, and your analysis will be confirmed if you know you have a better understanding of it. So we're going to talk more so about that, less about the system. If there's time, I'll answer any questions that you guys may have either about the Slingshot template or the Boss Money template. But I want to go over liquidity, and somebody asked about my markup because my markup looked a little bit different today. So I'm going to show you guys how I've been marking up the chart and identifying orders, and then getting my direction of bias based off those orders. All right. So I'm not gonna like introduce templates and all that like I normally do. We're just gonna kind of dive into this. All right. So what I'm gonna do is take it to the screen here, and it's really not much on it, but I want to clarify um, what you're actually looking at when the market is trending to the upside and when the market is trending to the downside. Like there's a lot of signals going on inside the price action that a lot of people just aren't aware of. And then I think if you are more aware of this and how to mark up the chart, you're going to see that the price action itself and the way the market moves pretty much gives you a signal. You don't even really need the system once you learn how to identify the open orders and what orders have already pretty much been closed by price movement. All right. Now, in an uptrend, I'm going to show it to you how it's normally taught, and I'm going to show you the reason why I kind of drew this downtrend, lower low, lower high like this, versus when I normally would, draw it like this, just with these lines. Now, these lines don't show you all the data. So when you go to a live chart, you still kind of confused on what's going on because the market doesn't just look like this, right? And when you come to your chart, especially if you're a new trader, you're expecting to see this basically, a zigzag motion. And without the proper understanding of each one of these movements, it's going to make it really, really hard to make an assumption of where you think price is going and why. And what I'm about to show you should be another aha moment based off of the way the market moved today on US 30, GBP USD, and I think EUR USD moved the same way. So I'm going to show you that later on in the examples. But what I want you to guys to understand about the market itself first and foremost is that the market is basically made up of the banks or the algorithm, whatever you want to call it, taking and creating liquidity. And it's happening all over the chart in every which way, all shapes and sizes on time frames. And if you don't understand how to read that or read that language, then it just makes things that much harder. All right. So I'm going to explain this and then I'm going to explain this. All right. In an uptrend, right? In an uptrend, when the market is making higher highs and higher lows, every time the market breaks above one of these peaks, that is the bank taking liquidity from some form of a retail trader who sold off of this area of resistance. All right. So if this was a resistance point and maybe somebody's on a lower time frame and they see that the market hit this area of resistance, a retail trader probably sold off of that resistance. And if they sell against the trend, which a lot of retail traders do, sometimes I do it too, they're going to protect their trade by putting a stop loss above this high. Now, when the market pulls back, right, it doesn't just pull back in a straight line like this example, right? It pulls back like this. It'll pull back, showing you a bullish candle, right? Excuse me, a bearish candle, bearish candle, maybe two bearish candles, a bullish candle. So it's going to pull back in a lower low, lower high formation down into an area of support, most likely feeling some type of inefficiency or into an order block. So if the market is trending up, right, the goal is going to be for the algorithm to take out the stop losses. Now, what a lot of people seem to forget, and sometimes I forget too, is that we did say that the market pulls back in a lower low, lower high, lower low, lower high formation, which means to create this, there's a buyer and a seller, a buyer and a seller. And if the market is pulling back to cause this pullback, then we know that sellers are in control. And there's not only money at the top of this, right? But there's money at every one of these peaks, unless one of them gets stopped out, which means you can identify the open orders. You see this peak is higher than that peak. That means this one got stopped out, but now there's an open order above that. And what I'm going to show you is that you're going to be able to identify where the open orders are and make an assumption where the bank is going to go to take out the remaining orders. So in this diagram, the remaining orders is above this high, and that high. This is excluded, right? Now, if there's money above these highs and the market is way down here, where do you think the bank is going to enter? The bank is going to enter down here to not only take out this order, but it's going to take out the open orders, this one, and then this one as your, maybe this is your first take profit until the market decides to go to the upside. So in an uptrend, the bank is taking liquidity, creating liquidity by tricking sellers to trade against a trend by running into an area of resistance. And then in this entire move, there's open orders for the bank to take to continue price to the upside. So the banks will enter down here and then take out all the open orders in these pullbacks, right? And when you can identify the open orders, when you go to place to trade, you can pretty much see what orders were already closed and which ones were left open for the market to trade toward, all right? And that's going to be your aha moment today, all right? Now, same thing in a downtrend. It's just the opposite of what I just showed you, all right? In a downtrend, the market makes lower lows, lower highs, lower lows, lower highs, and then a low, which means a retail trader, to create this lower low, lower high formation, has bought off of a minor area of support. And then this move, the market is pulling back in a higher high, higher low formation, just like this diagram. That means that there's open orders here, here, here. If there was a pullback here, this move closed this order, but left this one available for the bank to take, right? Right. So where do you think the bank is going to enter if the bank just took liquidity from these buyers, right, in order to go lower? The bank is going to enter up here. The bank is going to enter up here. Because in this pullback, there's all these open orders, and the market is doing what? It is trending down. So it's not only targeting this, it is going to target all the open orders in this pullback. Right. So when you go to place that trade, you know the market should go this way because you can clearly see on the chart where the open orders are. And then it's just a vicious cycle. The market will break structure, stopping out this entire move. It'll pull back again and leave open orders. And if the market is trending to the downside, the banks will enter up high and collect the orders. So it is the same thing. All right. All right. So when you're looking at a live chart, this scenario is happening on every single time frame. So you're going to be able to get kind of a directional bias based off of seeing this type of price action on a higher time frame. And then when you drop down to the lower time frames, the same process is happening in the direction of your bias, if that makes sense. All right. Now, if you are brand new to trading, this is going to be a little bit far-fetched for you. You're definitely going to need your one-on-ones because this is a little bit more advanced than just drawing trend lines, looking for some type of head and shoulders pattern. This is going to kind of be the eye opener, or what it'll do is it'll help you understand those patterns a lot better now that you see how the market moves. All right. Now, today, I honestly wasn't even going to trade today. It was a bank holiday, but because of FOMC, I knew there was going to be some price movement at market open. So let's go to the live chart, and I'm going to kind of show you what I mean by open orders and what I mean by the orders in these pullbacks. Right. So let's go to I don't want to go to NAS, but I'll go to US 30 first. All right. So this is US 30. I'm actually going to get rid of the 200 moving average for now. Right. And basically what I want to do is I kind of want to show you what I mean by identifying the open orders. We're actually going to use the arrow indicator to identify the open orders. And we're going to use a red line to identify all the closed orders. So I'm going to make this a red line. Oops, make this a red line. And I'm going to show you what I mean. Right. So on your chart, all right, this is the daily time frame. And basically, all you have to really do is just take a glance at what happened. The market's making lower lows, lower highs, lower low. So we know we made a lower low, we broke structure, we had some bullish activity, right? So we know after the break of structure, right? After break of structure, if you've been in the class before, the next phase is to trick buyers. So leading into today, we had already tricked buyers. We pulled back, right? And then we continued because we're in a pullback. And in a pullback, what does the market do? It pulls back in a lower low, lower high formation, which is basically what it's doing on daily time frame. All right. So I've already had a direction. I would already have a bullish direction of bias anyway. Right. Now, going to 4-hour time frame, right? If you look at the price action here, there's not really enough data. I mean, you can kind of see the big moves, like the one I just kind of marked up. You can kind of see that this move stopped out all these buyers off this support, right? But deep down in here, right, there's a lot going on to dictate that we were going to get, this strong impulsive move up, that we were going to get this strong impulsive move up. So to collect more data, we're just going to keep going down time frames. All right. So here we have the 1-hour time frame. Now, what I want you to look at is just this. Inside these moves, right, you can clearly see that every time the market broke below a low, right, broke below this move stopped out these group of buyers, right? Somebody bought off of this support, it came down, stopped them out, right? We had another break of structure here, right? This move came down, stopped these people out. So once the market moved up and broke structure above this high, we can clearly see that that particular move did what? It closed out all these orders. So I'm going to draw a red line here. This move to the upside stopped out these sellers, stopped out these sellers. And now there's an open order right here, right? So I'm going to draw a line right here, and I'm going to show you, not draw an arrow right here and show you that this is an open order, right? As soon as the market pushed up, you can see that from here to here, right? This push to the upside, right, is higher than this wick, right? Now, if you notice, the market had already made a high, and then a low that didn't break this low, right? Then it made a high, then it made a low that didn't break this low, and right where this arrow is an open order. So if you saw this as an open order, and you saw the market came down here, right, to give you a better price, where do you think the bank is going to enter the trade? The bank is going to enter the trade here to do what? Take out the order. All right. And that's what I mean by identifying the open orders and then seeing what orders got closed so you know which order to trade toward, right? And understanding, the direction. We obviously started trading up. Now, this is just a small example. I'm going to show you how this worked leading into today. All right. I'm going to show it to you on a bigger scale now. All right. Now look at the market from this standpoint now, all right? So the gray box represents the New York session, right? So right here, where the New York session starts, right? This is the beginning. This is 1400. I think it's supposed to be 1500, but that's right where New York session about starts, right? So we have to have an understanding of how did the market get here and where are the open orders, right? So if I look at this, I can clearly see that we were making higher highs and higher lows. This low didn't break below this low, right? So what did this move do? What did this move? Who got stopped out based off of this move that happened on Friday, right? So let's draw a line and see what did this move stop out? This move stopped out. Let's see, because this is higher than this. I'm going to use my crosshair. I'm going to show you. All right. So you see, I'm going to zoom in on it too, so you guys can really see it. All right. Do you see how this move went higher than this wick, and then there's no more price action for it to break above, right? You see how high that went? So it went about that high, right? So right here, we have an open order, right? All of this is irrelevant. Anything that's under this red line has already been stopped out. These are closed orders, right? So right here, I would put an arrow because I know that there's an order right here, right? There's money right there, right? Now look at this, all right? This move to the downside already happened during Asian in London, right? So, or this was on Sunday, right? So we know that the market moved to the downside and it closed the orders below this price action here because there was a pullback, right? And then it stopped right here. So I can literally just draw a line from here to here, right? So I know that everything from here to here, right? Let me see if I can draw a line from here to here, right? In between here has been stopped out. And where is the open order at? The open order is right here, right? Above this high. So now look at the market, right? We know that we're trending to the upside, right? We have a high and a low, right? And we can identify the open orders to the downside, but we can clearly see that momentum is bullish. We had a break of structure, right? So where are the open orders that aren't really irrelevant? Well, what happened over here? What did this move do, right? So this move is lower than this move, right? And this move is lower than this move. And if you want to check that, just draw a line right here. You see how these wicks over in this area go past this price action? I'll draw a line right here. This is how intricate this is. Look, you see how these wicks go lower than that, right? So we know that these are closed orders. So where are the open orders at? I'm going to draw an arrow just to show you, right? And these are not arrows I'm looking to trade towards because it's going against the momentum. But we know these are open orders, right? These people have not been stopped out yet, all right? So look, close order, open order. But where are we and what is the market doing? Market is making higher highs and higher lows, and we haven't had any breaks or structure. We are sitting at an area of support. So now is the time to make a designated decision. Where do you think the market is going to go? Which order makes sense for the bank to take out, right? If we broke any types of structure, right? If we show bearish momentum, below this area and maybe treated this area as support at market open, then we'd be trading towards these order, but we didn't get that. And if you look at the 200 moving average, we are above the 200 moving average on a 1 hour time frame, right? What is the daily candle today? The daily candle was bullish today, right? All signs lead to doing what? Trading towards the open order, all right? And this is how I caught the trade this morning. Now, go to a lower time frame, the 15-minute time frame, right? We can clearly see that in this area right here, we can identify, right, where the open orders are, even in this area right here. So I'm going to get rid of this line, right? And we're going to look on the 2-minute time frame. Now, keep in mind, right here is the beginning of New York, and then around 9:30, the market opens at, I think, 16:30 or 15:30. That's when the stock market opens. So where were the open orders when price was right in this area or right here around this 200 moving average? So what did this move do? This move did what? It closed out all of these orders right here to the left. right? You see, we had a peak here, a peak here, a peak here, a peak here, right? So these people got stopped out. And where did it leave an open order? Near your entry. Now we're not talking about this. This is where we want to get to, but where's the open order at for our entry? Right here. So just draw an arrow right here. We already know where the closed orders are. The closed orders are inside underneath this red line, right? So the market already pulled back, right? And when it pulled back in a lower low, lower high formation. And believe it or not, on lower time frames, the same thing is happening in here. There's money below this candle, that candle, this candle, until it decides to fill in balance. So it pulled back to close all the orders that were inside of this, believe it or not. So now here's our open order, right? The market hits that area of inefficiency. And as you can see, the market pulled up, closed an order below here. So it left an order where? Above here, right? Now, this is previous structure. So say you did enter the trade here, which I think I did, right? Your previous structure is here. Your stop loss would go below here or below this low conservatively. Now, where do you think the market is going to go? The market at market open, the market is going to do what? It's going to pretty much collect all the open orders. There's an open order here for your entry, an open order here for your entry, and the main target is this open order. And as you can see, where did the bank go today? To this open order. Now, if you believe it or not, the market actually went down and pulled back. So there's an order right here as well. And if you look at my video today, this was marked up just like this, right? There's an open order right there as well, right? If I draw a line right here, it got wicked. Watch. See? It got wicked, right? There's an open order right there. Because at the time, from down here, price hadn't gone up to close these orders yet. So imagine being able to mark up the chart and identify all the closed orders and what orders are left open, and then identify all the open orders so you know where the market is going to trade toward, right? So I'm going to show it to you again. If you got a little bit confused, we're going to mark it up again. And I'm going to show you just how I'm not going to say it's easy, right? Because this is a new way of looking at the market, but look at all the closed orders, right? And remember what I said, when price breaks below one of these peaks, doesn't matter on what time frame, money was taken from a buyer or a seller, right? When the market breaks above one of these peaks, we know an order had been closed, right? Look at it again, right? I'm gonna go back to maybe the 30-minute this time, right? So you can get a better view of it, all right? And understand we're reading the language over here to identify why the market is over here, right? And honestly, the big moves are all you really have to look at, right? Look, this huge move stopped out all these people in this price action right here, right? Just look to see how high this went. Put your crosshair here and look at the peaks underneath this line, right? Look at the peaks underneath the line, like, right? So we know that if I draw a line from here to here, right? Or right there, right? This is higher than this peak and this peak. Let's mark them, right? We're higher than that peak and we're higher than this peak. And all we're doing is we're trying to identify how price got here, right? Everything underneath here are closed orders. Closed, any little peak or wick, right? All closed, right? Anybody who sold, orders are closed. Look, orders closed, right? During Sunday, we pulled back, right? So we close an order here, right? We can maybe just identify the closed orders in red, right? We close an order here. So this is closed, right? That's closed because we got a gap, but we passed it, the gap past this point, that's closed, right? We consolidated. And if you look at it, and this is what I'm saying, how intricate it is. Look at this, right? So we consolidated, right? We went down, up, right? And then this right here went down past this. So all the orders below this wick, because of this move, guess what? Closed, right? And then there's an open order. There's an open order below here, right? And this is what I want you to understand, right? Even in the most smallest price action, there's an open order below here. This move goes up, right? And we're not trading any of this. This is just during Asian. This move goes up, closes orders above here, right? So we know that there's money here, market pulls down, closes this order, right? And then leaves money up here, and then we end up here. So what did this move do? This move closed out all the orders, closed out this order, right? And left money above this high, right? So right there, leading into New York session, we already know where the open orders are. We know who we got, we know what got closed, what didn't get closed, right? So now I'm gonna put this in green because I know that's an open order around the time I'm looking to trade. So now I know before price takes out this order, right? I know why the market kind of is in a pullback leading into New York session. Like I already understand why we're pulling back. I can see there's inefficiency. Look, this wick, there's a huge gap in between here. So I know our goal is to fill this before we take out the open order, right? Now, what pattern is right here? The same pattern that I teach. Look, before the entry, high, low, right? Break of structure. What is the next phase? Trick sellers back into an area of support. And then what is above this high? The open order, RTP. So your entry needs to be below the RTP, right? So maybe on this candle before price breaks above the high, or on the push of this candle at market open, stop loss can go below previous structure. And as you can see, what did the bank do? It took out the order, right? Now, as you can see, the market is heading towards the open order that's above here, right? You see the open order that's above here? That's where we're heading towards. What is the market going to do in an uptrend? It's going to pull up in a lower low, excuse me, in a higher high, higher low, higher high, higher low formation, right? So if you look at the market in this uptrend, right? Once price broke above this high, the bank took liquidity from these sellers. So in order to go higher than this, the bank has to do what? Trick sellers to sell off of this area of resistance. We pull back to fill inefficiency. So where is there another open order at? Above this high. Or you can just say it's another RTP. Draw a green line. You want to make sure you enter below the order. So you can trade where? Toward the order. Market pulls back again. There's another open order above here. The bank pulls back below the order. You enter on this candle, and where's the bank do? It takes out the order. Now, meanwhile, if you remember the higher time frame analysis, right? The goal is to do what? To get to this order. And as you can see, where did the bank go? Right to that order and took it out, right? So imagine, like I said, identifying the open orders, right? Let's look at GBP USD, all right? Same scenario, guys, right? This is GBP USD, right? Now notice, right here, we have, this is the 1 hour time frame. We have a low, we have a high, and a break of structure. Now, what do I say happens after a break of structure, right? Look, lower low, lower high, lower low, right? Lower low, lower high, lower low. What comes after a break of structure? We trick buyers to pull price back, right? The pullback happens in a what? Higher high, higher low formation. Look at GBP USD. It broke structure. It's pulling back in a what? A higher high, higher low, higher high, higher low, higher high, higher low. This wick did not break below this wick, right? Higher high, higher low. This is today, right? So where are the open orders leading into the beginning of the New York session? This is the reason why it's important to be on time, right? The beginning of the New York session is right there, right? So where are the open orders? What got closed leading into the New York session and what is still open to trade toward? All right, so let's look at it. Let's look at it, all right? So what is the biggest move that happened leading up till today? Obviously this move. So what did this move stop out? Let's just draw a line, right? All right, so this wick didn't go past this wick. So we know where the open orders are, right? We know that I can draw a line right here. And I know everything underneath this red line has been closed, closed, closed. Any little peak, closed. Anything that's a black candle, closed. So what's open? Let's draw an arrow on the open stuff. We know that's open, right? Because this didn't go past that, right? Now let's look at what happened over here during Asian session and the opening of on Sunday, the market opened on Sunday, right? We pulled back. The market went this way and that way. So we know that there was an order below here that got closed, right? And then the market went this way, pushed up. We know there's an order below here that got closed, an order below here that got closed, an order below here that got, okay, let's see. All right, so we got equal lows right here, right? And then we got this bullish candle right here. All right, so right now we have open orders here before New York open, and we just draw the arrows, right? We know there's open orders below here. If you look at it, maybe that didn't go. Sometimes you got to really zoom in on it. Look at this, right? So now let's see. Did this wick go lower than that wick? I'm gonna draw a line. See how it's equal lows? So these are open orders, right? These are open orders, right? Now the next candle forms, right? And you see that wick, let's zoom, I'm gonna zoom in on it. Well, I can't zoom anymore, but if you can see that, it actually wicked and stopped and collected these orders. That little tiny bit, and that's crazy how I never noticed how intricate it could be. That little tiny bit closed these orders. So these are closed now, right? And you got this huge candle. Now, where are the open orders at, right? Where are the open orders at? Well, we know that there's an open order above this high, right? And then what did the market pull back into? And let's go back to what we said in an uptrend. In an uptrend, the market pulls back in a lower low, lower high, lower low formation. So what's above this peak and this peak? There's money. So where's the bank going to enter? Down here to do what? Collect the open orders, right? Now, look what happens. I'm going to just take the arrow and I'm going to identify all the open orders. That's an open order. This is an open order. Even this wick is an open order, right? So actually I forgot one because here's an open order right here, right there, right? So we got this bullish candle, right? And now I can pretty much, look at my pattern. I can see it. Look, we had a break of structure. So we have a high and a low. The next phase tricks sellers back into an area of support. I know where my open orders are because I marked them. Here, here, and here. I know where my closed orders are. These are already closed. And what is the market doing and what didn't I do? Well, the market's making higher highs and higher lows. And what did I not have? I didn't have any major breaks of structure. We are still in an uptrend. So what is the logical place the bank is going to go to take out? To go, not take out, but what is the logical directional bias to choose? Should I sell right here? Does that make sense? No. Take out the open orders. What did the bank do on GBP USD? It took out the open orders. Every little green line, the market went past. Every little green arrow, excuse me, the market went past. Do you see what I'm saying, guys? About identifying the open orders? The open orders are not just above the high, they're in the price action of the pullback, right? And you can identify what was closed, right? You see how in this diagram I have it higher high, higher low, higher high, and then then it had a minor break of structure here. This move closed this order, right? Then it went down again. This move closed this order, and then we hit inefficiency. So what's left over? This order and that order, because nothing stopped it out yet. If I enter down here, guess where we're going to go? To take out this order and that order, right? Now, if that's not an aha moment, I don't know what to tell you. Now, marking this up, if you're new, it's going to take some time for you to learn and trust it. But if you back test this, you're going to see that it wins, all right? Look at NAS 100, which is what I traded today, which I never trade. And I think this was similar to US 30, right? And like I said, we don't really have to look at everything over here, but you want to have an understanding of what the market is doing overall, right? Now look at NAS 100, right? This price action is lower than this. You see, I started on the 4 time frame, right? So we broke below this low, right? But this happened a while ago. So what have we been doing, right? After the break of structure, we start to pull back, right? So we've been pulling back just in an ugly fashion, up, down, right? Just craziness. But if you look at it intricately, right? This is not lower than this. So we're still trending up, right? We're still trending up. That's not lower than that. So, it all makes sense why, we have this higher high formation, right, leading into the price action here. So this just gives me an idea of, why are we bullish? Because after the break of structure, the next phase is to do what? Trick buyers into buying higher high, and I'm gonna just show you what I mean. Not all it's the big swings, higher high, higher low, higher high. It's not all this stuff in between, right? That's what I mean. When you look at the chart like this, you're expecting this, but the market don't move that way. The market moves, miscellaneously, but you still have that picture of these straight lines if you can actually see it that way. Now, if you're a novice, I don't expect you to be able to see it that way. It took me a while to see it that way as well, but that's what's actually going on. Is that particular this price action like this is what's happening. All right. Now, this is today, this is Friday, right? And then the price action in between this is Sunday. So we don't really need to care about what happened over here. We know the reason why we're going bullish because we already stated on the 4-hour time frame that we broke structure, and after the break of structure, we create liquidity, and that's what's happening, just in a bigger fashion on the 4-hour time frame. So directional bias is bullish, right? So look at this. I'm gonna go to 1-hour time frame. I think there's enough data here. Yep. So why is the market right here, right? This is the beginning of New York session, and we're right here. Why are we right here? Let's look to the left and identify where the open orders are and where all the closed orders are. It's the same shit. Look, this is the biggest swing. So what did that swing stop out? Draw a line, all right? And then look at the peaks below this line. All right, I'm gonna draw a line right here. Look at the peaks below the line. Look, stopped out. Stopped out. Any little peak, right? Which means, honestly, I don't even have to draw a peak. I'm just going to do this just so you can see, right? Just going to do this. Stopped out. This is irrelevant, right? We're bullish. So, I mean, there's open orders below, right? But we're nowhere near that stuff, right? And our directional bias is bullish, right? So now, look at the market over here. I'm going to go to the 15-minute time frame, right? What happened during Sunday's price action? All right, the market went up, down, up, down, up, down. We had a gap, and then the market came down here. So what did this move do? It closed all the orders over here. Look, it closed that order. This should be red, but I'm sick of changing the color, so I'm just going to leave it green. You get my drift. It closed that order, right? We had a pullback, so there's money here, right? This pulled back into that candle, so there's money here. I'm going to identify all of them. Look. There's money below this candle, right? And if I draw a line here, I bet you a wick goes through this, right? Look at all these wicks closing, right? So we close all of that. Now, leading into the New York session, right? What happens, right? We're consolidated, right? And then there's open orders inside this consolidation, right? And this is the reason why you don't want to, trade NAS right at market open. Like you don't want to just enter aggressively, right? Now, granted, we have, and I'm gonna look at this on the 5-minute time frame so you can see it. All right, because really, I don't really need to worry about everything over here. I need to worry about everything that happened leading into this. So look what happens over here. We have a move up that closes the orders here. So I'm just going to draw a line right here, right? Draw a line here. Right? That leaves an open order above this high and one above this high. And I'm just going to just close them out as price moves. Right? There's an order here. There's an order here. Right? Now watch what happens. The market pulls back. Right? Closes an order below here. Right? This does not break below this. Right? So we know that there's open orders below here. Right? And they're fairly close. Right? So leading into New York session, 9 o'clock is right around, 9:30 is right around, I don't know if it's 16:30 or 15:30. I don't know. I think it's 16:30. Right. That's around the 9 o'clock session. Right. Well, not 9 o'clock session, the New York stock open. Right. So right in this area, right, I'm looking at it on the 15-minute time frame. Right. I'm looking at the pattern. Right. Look at the pattern. Right. And keep in mind, I'm going to draw this a little bit different. We know there's an open order above here, right? Remember, everything below here is stopped out. So this is your long-term order. Now, what is the market doing? Regardless of it being, you know, consolidated in this area, what is the market doing as a whole? What pattern do you see? I see that break of structure, right? I see two levels, right? And I can actually just use this one because that's a level. So I see a high and a low and a break of structure. I see we pulled back into an area of support, right? So where do you and then I have a huge gap right here. That's a dead giveaway right there, right? A huge gap to fill. Where do you think the market is going to go? Right? Where do you think the market is going to go? It's going to go towards this order. So the only way to get into that trade is to identify an order. Now, this consolidation that you see right here, honestly, there's no reason to actually place a trade until we do what? We break out of this. So what happens right here? We break out of it. We collect the orders above here because these are open orders, right? And now we have to do what? Wait for the market to pull back so we have an opportunity to trade towards what? Another open order, right? So notice we have a high, a low, a break of structure, next phase, trick sellers back into an area of support, right? And then where's your entry? Below this order. I don't care if you enter on the top of this candle. The market's going to do what? Go up and take out that order. And then remember where's the main open order at? This high. And where'd the market go? To that high. You see what I'm saying? Now this is a little bit, just taking it to another level. You could literally stay on the higher time frame, right? And you could still see it, right? You could see it on the higher time frame. Watch. Look at this is the 4-hour, right? And that way you don't have to deal with all the noise. Look. Let me show you again, right? This is the biggest move. We know these orders will close. We know this is an open order, right? Right here. And this is how I did it. I did stay on the higher time frame. We know there's an open order here. We know this is a pullback, and in a pullback, there's orders. I can go to 1 hour just so you can see, right? We have a black candle, a yellow candle. So that right there tells you that there's a pullback. We're going lower low, lower high, down to this area, right? So we know there's orders in that pullback like this. There's an order here. There might be a little pullback here. We know there's orders in that pullback, right? So where do you think the market's going to go, right? And then this filled an inefficiency. Where is it going to go? It's going to go up to fill these orders. And after this big push to the upside and then this move to the downside, we can clearly see that these orders were closed and another order was left over and the daily candle was bullish, right? You see what I'm saying? There's an open order here. And now we have another, reason for the market to go up to fill this inefficiency. That still really hasn't really been filled yet. See what I'm saying? That's how the market works, guys. All you have to do is identify the open orders. And then, like I said, you don't have to map it out like this, but I wanted you to see how intricate identifying these orders can be and how the market actually moves. It's crazy because there's people trading inside of this consolidation, and you can see what's happening to each one of these traders when there's a big spike. Like we can see that if somebody sold here and they didn't close before price spiked up, they got stopped out. So you want to trade against these people. All right, let's look at something else. All right, this is EUR USD, and it's weird. Everything is the same. Kind of want to look at. Let's look at something else. Maybe we can figure it out on gold. I actually think gold did the same thing, and I don't even trade gold, but let's look at it anyway, just so we can identify the open orders. Now, this is one that I didn't analyze today at all. So let's just look and see. Everything looks the same. All right. So this one's a little weird because we got this huge gap, and all right, let's look at it on a 4-hour time frame. Actually, let's look on the daily first, just so we know what's going on. All right, so we know what's going on. All right, we had a break of structure here. Right, market pulled back. This didn't break structure here. Just to double check, just draw a line right here, right? So we didn't break below this. So after the break of structure here, what is the next phase? Trick buyer. So that's what we're doing. We had this bullish candle right here on Friday, right? So let's go to 4-hour time frame. Now we have to analyze what happened up in here. What orders got closed leading into the New York session for today? Let's go to 1-hour time frame. All right, and zoom in. And where's the biggest move? Like, what is the biggest push? This looks like the biggest push. And actually, this is the biggest push, even though there's a gap right here. So let's just draw a line right here. So what did this move close? Let's draw a line at the top of this wick. All right, so it didn't go past this wick, so there's an open order right here. And I'm just going to say that for the past. All right, there's an open order above that wick. So we know that everything below here was closed. So anytime there was a pullback, it's closed, close, 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 right? And then leading into the, I guess the Asian and London session, market pulled back, right? So this pullback closed orders below here and below this wick. So we know that from here to here, all orders are closed. So where are the open orders at? Let's just identify them. There's one above here because this moved to the upside, closed all these orders, and left this one open. That means, there's an open order here and here and here. Inefficiency right here, right? Inefficiency in here, right? So we know there's a reason for the market to even go higher, right? And then what pattern do you see right here? Well, we have a break of structure, right? That's a high. I'm gonna use this as my low, and then look, support, right? So if you're on time, this is New York session, right? So if you're on time and you're watching this happen, right? Where are your open orders at and where would you trade toward? We would trade toward anything that was left open. We know everything below here is closed, right? And we know that this is open. And we know that's open. There's inefficiency up here, right? So where's your take profit one? At least to this wick right here. Now we go to a lower time frame, 5-minute time frame, right? Actually, let's go to 15-minute, right? And now we have an idea where we want to enter the trade. We want to enter the trade where? Toward the order. So we have a bullish candle here, right? And this is where you can start, really looking at the price action on lower time frames, right? This is a push phase. So we know that there's an order below here as well, right? There's an order above here. We break above here, right? Next phase, trick sellers. So now you have an order for your entry, right? It's the same pattern happening over and over again. Look. High, low, break of structure, next phase, trick seller, open order, entry. And then just remember, we're trading towards this wick and then the inefficiency above. Now look to the left, right? Inefficiency, remember I said there was an open order here. So we know there's an open order above that candle, right? And inefficiency, if I draw this all the way across, we fill this, look. See, to the wick. Now, hoping y'all are understanding this now, right? The only thing that's tricky about today is this gap right here. This gap would have scared me. I would have thought they would have filled that gap before it went up. But if there's no breaks of structure, and this is the reason why, if you weren't sure, this move right here would confirm it because there's a break of structure to the upside. So no major breaks of structure even after this gap. And then, the daily candle probably being bullish, 4-hour candle being bullish. There's no reason to sell, right? And we know that the only open order would have been below this price action. And it just, you could look at, especially after this candle, we're not coming to get this anytime soon. We're targeting the open orders. All right. All right. And I didn't analyze this today. That's just me marking it up, and, pretty much showing you that if I identify open orders, my goal is to trade towards this, nothing below it. All right. Nothing below it. All right. Because the only open orders below it would be below this price action, and probably below whatever's going on in this gap, and we're nowhere near that. It doesn't even make sense to even think about trading towards that because we're in an uptrend. So you wouldn't even be thinking about those orders. You'd be thinking about the orders that go with the trend. All right. So I'm hoping you guys, are understanding what I mean by open orders. It's just once you are able to identify that, then it's game over. It's game over. And you'll see that it's not just today's price action. You could back test this to, each day. Like I could start right here and want to know why the market is over here, right? So I could look to the left and identify where is there an open order. I can clearly see that the market is making higher highs and higher lows, but why are we right here? Where was an open order that was left? This is your highest peak. So we know that's an open order, right? This is higher than that. So this price action didn't stop out this. This had never got stopped out. So if I draw a line from here to here, right? Or just draw or just use the crosshair, right? We can clearly see that everything below this line, right, is closed. Anything above this line is an open order. So this is open, 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 inefficiency, open, open, open. It's all open, right? All that's open, right? And this is New York, right? So identify everything that happened over here leading into New York. What got closed and what is left open, right? So you can look at the big swings. Look, this closed. Everything below this. So closed, closed. What's open? Let's draw the arrows. Just look at how I'm identifying all the orders before we even get there to that particular day. And we're talking about this day randomly, right? We know there's money here, and what are we doing? We're trending up, right? So look at Asian in London, right? What happened during Asian in London? Well, it pulled back, right? So when it pulled back, what orders did it close? It closed the orders below. Shit, use this one. It closed the order below here, below here, right? And then remember, higher high, higher low. This wick inside this candle. There's an order below there, right? So we can see what got closed. An order got closed below here. Did this price action go below this? All right, so we know everything got closed below that, right? So this got closed. This is not lower than that. That's open in the past. We're not worried about that, right? So the market goes up, comes down, doesn't close the order below here. We're not worried about it. Market goes up, goes down, goes up, right? Closes an order up here, right? So, and this is what's crazy about it is you look at this. I don't know when you come to the chart or what your thought process is, but the market's making higher highs and higher lows. So any type of sell before structure gets broken is low probability. But we can clearly see that we did break structure here. So there's an order below here, here, and here to be taken. So if you took this trade, you can see the rejection right here, right? And actually, you probably see it on a lower time frame, right? I'll go to 5-minute time frame, right? You could see that if the market breaks below this, it's going to do what? Close the order below this price action and this price action and that price action, especially with that gap. So you could have took a trade right there against the trend, right? Because we know it's going to take that money, right? But we are in an uptrend. Really, the only way for us to go lower is to pretty much break below this entire structure and retest this area and then have a reason for it to drop. We're still bullish. We already know on the higher time frame, right? Go back to the 4-hour time frame. We already know the reason why we're even going this way is because we have a low, a high, a break of structure, and the next phase is to create to trick buyers, and we're making higher highs and higher lows. So the goal for it to just tank from here, it just doesn't make sense, right? So if you look at it, right, let's go back to the higher time frame so you can see it, right? And keep in mind we're a few days behind. We're talking about this day on New York session, right? 30-minute time frame, right? Where did we identify the open orders that go with the trend? Because we don't care about the ones that's going against the trend. They're up here. So the moment the market pulls back and shows us bearish momentum, right? Where do you think the market is going to go? It's going to go towards the open order. So this right here is the highest peak, right? So where would you want to enter your trade at? Down here below it. And you have to make sure that you're doing what? You're trading toward an order. And after a pullback in an uptrend, where are the orders? Above the wicks. So there's an order right here as well. There's an order above that wick, right? So look at all these orders to trade towards that are going with the trend. We don't care about the ones that are going against the trend because we clearly have no breaks or structure. Look, higher high, higher low, higher high, higher low, no major structure getting broke. We don't count this little stuff in between here. It's the big swings, right? No major breaks or structure, right? A whole area being treated as support multiple times and open orders above the high. Where do we trade toward? The orders, right? And then inefficiency. And if I draw a line from here to here, what do we feel? Inefficiency. Notice, right? In this area right here, there's an order above that candle, that candle, that candle, that candle, that candle. If I draw a line right here, look, it clears all the orders. And then look what it does in the process. We're pulling back in a what? Higher high, higher low, higher high, higher low formation. This is probably news, right? So there's orders here and here, right? And they all get taken out. Now, granted, this is a different day, so you're going to have a totally different analysis, but you get my drift, how you identify these orders at the beginning of the New York session, right? This is going to be the key. Now, when you're doing this, right, and you're adding the system will confirm that. Like this move here, we know there's open orders here. If you trade and you trade in, to the upside, if I, put, let's switch, let's do this. If I put the system on there, you'll see that the system confirms that analysis, and I'm to the point now where I don't even want to use the system anymore. I just want to identify the orders that the system, that the, naked chart gives me. All right. But look. All right. So look, this is the 1 hour time frame, right? High, low, right? Break of structure, open orders, pullback, support. Look at the arrow. It's telling you the market's gonna go to the upside. And it told you during the Asian session, right? If you want to go down to lower time frames, right? Like 15-minute time frame, look, we're not worried about the black arrows. Why? Price is above the 200 moving average. All we care about is the green ones. And what are the green ones telling us? Market's going up. You see what I'm saying? System agrees. And that's what I mean by, like, it's one thing to use the boss money template to just scalp, these little moves like that. You can do that, but you're doing it based off of stochastic, this indicator, that indicator, 500 pips, cool. But there's going to be some times where, you're going to hold too long. You might take this one, you're going to hold too long, and you're going to get stopped out. Do you see what I'm saying? A lot of people are telling me that, they're winning, then they're taking the loss. They're winning, then they're taking the loss. With the boss money template, I told you guys, 1 or 2 opportunities and you're done for the day. If you just took this one, right, and that went up, you could have been done with it. That's 700 points right there, 500 points right there. But then this is going to happen. You see what I'm saying? So it's how you use this template to your benefit, And another thing too, if you're using the boss money template and you're not following the rules, higher time frame, 15-minute time frame, 200 moving averages in between price, this is a no trade scenario. So technically, with this particular template, if you're not doing Slingshot and you don't understand the price action, you can't trade today. This moving average is inside price. Until it comes outside of this channel, you shouldn't be trading. You see what I'm saying? Or unless you can find an opportunity in a lower time frame based on off of a break of structure. But this template has to be used correctly, along with how it's written in your directions. It says between 300 and 500 points, right? And then you get out. You don't sit there and sit there and scalp all day, because I guarantee you your first scalp's a winner, your second one's a loser, your third one's a loser, and then you're playing catch up on the fifth one, hoping to break even or go or profit for the day. With this template. So what I want you to start doing is using this template and looking for the best possible setups, but then have an understanding of, if price is already moved and you want to get into this trade, then you better understand this stuff. Because if you don't, then you're going to get caught with FOMO chasing the market, guys. All right. And if that's the case, don't use this template. Use the Slingshot template. and identify price action along with the indications of where the market is going. If you absolutely need an arrow underneath price to take a trade, and the market has already moved and you didn't place a trade, then you're going to get stuck in some type of a drawdown that's either going to scare you out of the trade or honestly stop you out. Okay. All right. So I'm hoping you guys, are getting a better understanding of this. Because once you understand liquidity, I'm telling you, it's a game changer. All right. So I'm gonna open it up for some questions, see if anybody has a question, and then God, it's already 8:35. I'm gonna be late. All right, and then see if you guys did understand this, or there's something that I can clarify. All right, so I'm gonna unmute you guys. All right, I think I unmuted you. Just mute all. Unmuted. All right, I think you guys are unmuted. If one of y'all has a question, you're more than welcome to ask, and then I'll try to answer your question as soon as possible. But I hope you guys understood what I taught today. Does anybody have a question? Anyone? Or if y'all can't unmute, let me know in the chat and I'll figure out how to unmute it. Somebody asked, what is the significance of the first candle of the New York session or last candle of the Asian session? Does it help determine direction? No, that doesn't. No, there's nothing significant about that candle unless it's taking out liquidity. Just look to the downside. We can't unmute. Okay, let me see if I can figure out why it's not unmuting you guys. Allow this to unmute themselves. Yes. All right. Let's see if you guys are unmuted. Does anybody have a question? You should be unmuted now. Anyone? To trade indices, it's much better to wait after 9:30 Eastern. Most days, yeah. Honestly, today, NAS 100, no. I actually entered before that and took a risk, but I mean, it always gives you an opportunity to get back in. It's just manipulated, but unless you really understand where price is going, usually market open is a liquidity grab. And it's going to make you think, okay, we're bullish at the beginning of market open, it's going to go bearish and then bullish again. So you just kind of have to, and that's why I say that's identifying the open orders will give you, that pause, because you'll see, okay, we're probably going to take this out first before we take out where the market is actually going, which is basically an example of what happened with NAS today. As you can see, NAS, see how this wick came down at market open, it collected all these orders, went up, collected an order below this wick, and then decided to go up. So a lot of manipulation on NAS 100 today. All right. But I think you guys can unmute whoever wanted to ask a question. Does anybody have a question that actually wants to talk? Hello?
Can you hear me?
Yeah, I can hear you.
Yeah, hi. So is it a way do we have any at some indicators and charts for open orders that can be more useful for in the beginning?
You have to talk a little clearer. I can barely hear you.
Do you know if there is any good indicators to get the open orders on a chart that we can see them as soon as
I don't know of any that can do that. That's the thing about an indicator that does that is I'd rather you be able to identify it on your own versus relying on the indicator, because what the indicator is going to do, it's just going to give you and that's if I can find one. And it's weird. Have you ever seen an arrow indicator that? Because I see it, and every time I see this arrow indicator, I'm like, yeah, I'm not using that. Like you'll see the market going up in an uptrend, but you'll see these arrows underpriced the same way I have them drawn, and you're like, why is it doing that? When you see what I'm saying? Or you'll see arrows pointing down on top of price. If you rely on the indicator, it's going to make you kind of biased to what you think if you weren't using the indicator, if that makes any sense. You know, that's why I say, like, if you don't understand how to identify it on your own, then that's why you need that one-on-one. So I could watch you do it on your own and then tell you if that if you're doing it correct, so you can trust what you see. Because, and like I said, I don't know how you've been taught, right? I don't know how you've been taught to trade, but when you see this, it has to make sense to you, right? It's just, I don't know if your eyes are not seeing it yet, or you just haven't had that aha moment. This price action that you see, it's happening on a scale this big on a higher time frame to get a directional bias. It's happening this big on like the middle time frames, 15-minute, 30-minute, and then it's happening on a 1-minute time frame on this scale, right? And that's the part where you have to understand what each price movement means. Like this is a 1-minute time frame, right? But the peaks, right? The peaks are what you have to look at. You see this peak, right? You see this peak, and then you see this, right? And then you see where price is, right? If you look at this, you could read this on the 1-minute time frame the same way you would read it on the higher time frame, and you would understand why it's going this way. I could look over here and pretty much tell you that this move right here stopped out all these people, right? And in order to go higher than this, it's creating liquidity, right? So there's an order above here, above all this, right? There's money here. And if the market is pulling back, it's pulling back in a lower low, lower high, lower low, lower high formation, right? So where are the open orders at? Above here, right? Where's support at? Right here, right? So if you see the market down here, right? And the open orders are here and we're in an uptrend, right? Where are we looking? What are we looking for? And it's crazy because on the Boss Money system, the arrows tell you where the open orders are. The black arrow are your open orders. We're not worried about these black arrows because we're in an uptrend. We're worried about the green ones, right? And then you can even look inside this price action here, and you could tell if you come to the chart and the market's already down here, or even if it was right here, we could tell what happened, right? Why? This move came down and closed this order, right? Then it went up, came down, came up, came down, came up, and left an order here, here, and here. And this move closed all these orders, right? Then the market hit support, went up, came down, and then what was below here? An order. The market did what? Closed that order, right? And then we hit support. So where are the open orders at? Right? We're not looking to trade this. We're not looking to trade this way. The open orders are here, here, here. Wherever there's a pullback or a bullish candle in between the bearish, there's an order for the market to take out. Right? Now notice we're below the moving average. So we get above the moving average, the 200 moving average. Notice that right here we're outside of the channel. We have a signal. Now look, oversold, white lines touching the red on the TDI, right? We probably have the bullish spike here. I don't have, this is not, it's kind of too far back. Keep in mind, we're on a 1-minute time frame, right? So where are the open orders at? Right here. So if I entered here, what am I expecting to do? We already know what orders were closed. All of these were closed. The only one that's open is this one, right? And we're not going in that direction. We're in an uptrend. This is the only open order. Nothing stopped this out. So where are we going? To collect the orders that are going with the trend. So where I would enter with the trend. Do you see what I'm saying? This is on a 1-minute time frame.
Yeah.
You do the same exact thing on the higher time frame, right? Now, if this price action was pointing in this direction, then where would the open orders be? Here, 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 and here. And where would I be trying to enter? Up here. To take out this order, that order, because the orders above here would be irrelevant. We're not going in that direction. Do you see what I'm saying?
Mm-hmm.
That's what you have to understand. And like I said, the system, right, is going to make it so when you see an arrow outside here, you should be analyzing the chart this way if you want to make sure that that signal is valid for something significant more than 500 points. Or you could wait for price to break above or touch the channel, wait for a close above and hope for the best and get your 500 points that way. I mean, you could do that, right? But can you stop? Can you stop doing it? You're going to do it and go, that was easy. And then you're going to do it again and take a loss. You're going to do it again. That was easy. Take a loss and you have a losing day. that's what people are telling me. It's like, man, I was winning and then I lost it all. And I'm like, well, how many did you win? I won the first trade. And how much did you have? I had about $400. How quick was that? About 5 minutes. And you had a losing day. Why'd you keep trading? You see what I'm saying? So like this template is a blessing and then it's a curse. You know, you see what I'm saying? Because you could have did that 3 days in a row and had $1,500. You see what I'm saying? You know, it is discipline, but like I'm telling you, if you understand, what I'm showing you along with this template, or like I said, Tim, I still like the slingshot template because I don't like to just scout for 500 points. The only time I like it is if the market is consolidating because that's just because I know how to do it. But if I know there's a big swing happening, I want to understand where the close and open orders are. So if I do place a trade and it goes in that direction, I'm not scared to leave a runner because I'm gonna tell you on NAS 100, I took it all the way to the top, and I ain't leave a runner. I left them all open. I was like, fuck it. I know it's going up to collect that order on NAS 100. You see what I'm saying? This was a no brainer, and the reason why it was a no brainer because look where we're at on the daily time frame. We're sitting on the 200 moving average, like we were going up. It's just given. You see what I'm saying? And then, like I said, on the 200 moving average, you could see that we already had a break of structure and a pullback. Look, it was a given. High, low, break of structure, next phase, trick seller, RTP, we went up. You see what I'm saying? So that one was a no-brainer. But just wanted I wanted to hop on here and I wanted to show this to you because this makes a lot of sense. As far as getting a directional bias and then trusting that the market is going to go in that direction. The hardest part is all of this shit right here. These pullback manipulations, because you really like how far is it going to pull back? Is it going to pull back into that inefficiency, or is it going to skip it and not go into inefficiency? Sometimes you just got to take that risk and take the damn trade. You see what I'm saying? Or stay on the higher time frame and see if the daily candle comes back to the wick. That's what I saw on the on NAS on the daily time frame. I was like, if this wick comes back to this wick, then it's going to buy. So I was waiting for this. You see how those wicks are just touching? I was waiting for that. I was like, if it comes back and touches this wick, it's going up.
Balance.
You see what I'm saying? So that's what I was looking at because if you look at this and then you try to go to the 15-minute or 5-minute time frame and look at it, it's messy. You're like, you know what I'm saying? You really can't tell. Is it going to go up? Is it going to go down? You can't tell. So, that was the main thing I was, rooting for was for these two to touch. Because if those touched, I knew it was going up. And honestly, like I almost thought that this was going to do this, that bearish candle. I thought it was going to do this and come in to this inefficiency and come way down here. So, that one could have easily been a loss. But then, like I said too, why would you take this sell when we haven't had a break of structure? So even if it came down here, it's low probability going against the trend. I mean, the previous low is way down here or here. So like it could have came all the way down here and you still shouldn't have took the sell. Do you see what I'm saying? Technically you should if you took it, you would have won, but you technically shouldn't have took it because it would just did this shit to you. Because it would have been a higher low. You see what I'm saying? So, and like I said, in the heat of the moment, it's harder than what I'm showing you. I'm not gonna lie, like it was really hard to hold NAS today. I was like, fuck, watch it drop just because I know it's gonna go up. And when I saw this candle, I wasn't in the trade yet. Is when this candle formed, I was like, it better go past this candle. But now I'm pissed. So that's what I wanted to show you guys today. And the reason why I hopped on here is because I noticed once I started identifying open orders, my bias was that much stronger versus me just saying, okay, I see a high and a low and a breaker structure and an order up here, I'm going to place a trade towards that order, which that works, but you have way more confidence when you identify all the order for as many open orders as possible. and you can draw this line in that direction. It's like, oh, we're in an uptrend. I might as well look at all the open orders to the upside, not any to the downside until I get a break of structure. You see what I'm saying?
Mm-hmm.
All right. Anybody have a question? Anybody else? Anybody? Anybody else have a question?
Hey, Jared.
Yes.
Hey, from my understanding, so the next open orders, since it went up, it'll come down. Are you on the US 30 right now? Oh
Yeah,
no,
I
you're
think
on the
US 30 is bullish. So yeah.
yeah, but
So
the next
yeah,
open order would be at 4,300. Would you agree to come down
it,
to
it would be right
that
here.
to pick
That would
up?
be the next open order. Yeah, right there. So 40, like, well,
Oh, that will be 4,500. Whoa,
well, I'm
400.
looking at the daily. I don't know what time frame you're on, but
I'm on the hour.
all right. All right. So this candle, so it'd be here, like above that candle, right? And like
Yeah,
I
that's
said,
what I got right there.
above the entire peak. But I'm like I said, I'm marking all of them. I'm like, because if I can mark that many, I know that there's that much more for it to push. But like I said, this is still we're still going against the trend. We're not really trending to the upside. We're still in the downtrend. You know what I'm saying? We're still basically to the downside. We're not really trending up. It hasn't been a change of trend. This is still a pullback. As far as
Okay,
I'm concerned.
so
Do you see what I'm saying? Because look, all this structure is here. We have a low,
yeah,
a high, a breaker structure, a pullback. There's inefficiency right here, so it can halt basically right here, or it can halt above here. So basically, I'm looking for it to, you know, take out this order because there's an order above this wick as well. And then if it
yeah,
decides to go further, the candle came here, right? Open here and went straight down. So there's money above this candle. There's a seller, it's sold. Seller, it's sold. So there's money above all of this. If you look at it, well, actually it's not equal those, but this is the last up candle. I mean, it could go above here and here. I would just call it quits and not try to chase this. You already missed the move, so there's no point in chasing it. You know, I can see it either going above this or even further. It's just, right now is not the time to try to chase that move to the upside. But, because if you look at it, like I said, we're making highs, lows, highs. We don't have any major breaker structure yet. Major breaker structure would probably be above this high. When a 200 moving average starts to do this, then we know that when it looks like that and we're respecting it, then we know we're trending to the upside. So I'm pretty sure we're going to hit some form of resistance and we'll pull back. Probably feels inefficiency here, but
and do you think we'll pull back to like 43331 right there to all the open orders below it?
I can't
Three
say.
something.
I mean, I don't want to jump the gun and say we will, but
Well,
because
I'll
if you
just
because like if you
taking
look at
what you
because
go
if you
ahead.
look at like I said, if you look at the higher time frame, make this daily. Well, this is NAS. Hold up. If you look at the higher time frame, I feel like it would trade towards inefficiency. So if you look at it on the daily time frame, right? Um, was there any inefficiency? All right, so the major breaker structure was really right here. That was major, right? And then we did break below all of this, right? So I would expect us to come back to at least a 200 moving average. You know what I'm saying?
Reason to drop. Would that be
Yeah.
your reason to drop right there? Comes back up there.
Well, like I said, I don't want to jump the gun and say that because it's all about
Yeah,
we're right on a 200 moving average on the weekly.
yeah.
Technically, if you look at it on a weekly, we're bullish. And it's really hard for a weekly candle to just go bearish, you know what I'm saying? And like this signal right here, respecting the 200 like that, there's money
Oh
above
yeah,
that wick, that wick, that wick, that wick. So,
got it.
and then like if I look at it, I look at it this way, your high, low, You know, so I see orders here, 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 here. You know, I mean, it could do that. You know, see what I'm saying?
Oh, I got you.
That's a
Right.
high, a low, breaker structure. And like I said, you know, I didn't do it on you know, I've never really done it on the weekly. So if you look at it on the weekly time frame, you know, what orders were closed. This was the biggest swing on the weekly. So that's an open order. All of these are closed, right? So this came down, closed, closed. So everything inside here is closed, open, open. And what are we doing? We're trending up. So we're in an uptrend. So where are the open orders at?
Got it.
I'm just going to draw a line right here. These are the open orders. I'm just going to make this line green because I'm sick of getting arrows. So these are all open orders. You know, if I see more bullish pressure, or you know, this support get respected, what are we going to do? We're going to clear this order, that order, that order, that order, that order, and possibly that order. You see what I'm saying?
Yeah.
So, you know, because like I said, you know, we're not trending down right now, and to the downside, these are all the open orders, right? Are we anywhere near these orders? These are the open ones on the weekly. Nothing stopped this out yet, right? We know that got stopped out. We know that got stopped out. Nothing stopped this out because this is the one that caused the stop outs, right? And nothing has come and stopped these out. We know all the orders inside here are closed because this went higher than this wick. I'll just double check that, right? Yeah, so we know there's an open order here. And I'm gonna start charging $1,000 for this shit. Look, there's an open order there. one above here, because this move stopped out all of this, but it left this one. So that's open order, right? Actually, I should make that to the downside. I should be pointing towards it, right? But this is an open order above that wick. And don't tell me how I identified this. I was playing around with it over the weekend. I was like, there's got to be a way to do this. You know what I'm saying? So look. So all these orders are open. Wherever there's a wick, there's an order. Right? All this is open. Nothing stopped this out yet. This got stopped out. That got stopped out. Open, open, open. And where are we going? We're going this way. You see what I'm saying?
Still the open orders up right
So
there.
where this green line is open orders. Unless something drastic happens and we respect this as resistance and we start taking out all these orders, what's more likely to happen? You know, so on the weekly, I could just say, you know what, I ain't going to trade until price gets above here. And once it gets above here, I'm holding. And there's your money. It's going to take out all those orders to the upside. Now with the economy, I'm like, yeah, I thought we were like going to a recession. Why the fuck would we go this way? But you know, it could happen. That's just what I see for now. You know, but we're not there right now. We're playing around, you know, in these little scalps. So we gotta read this shit. But long term, you know, that's where we could possibly go. We're not going to go straight there. We're going to zigzag and manipulate. But if you keep your eye on the higher time frame, we break above here and respect this as support. There's an order above that wick, this candle, that candle, this candle. You see this wick went above that? That's a closed order. There's money right here. Do you see how I'm reading it? You see
Yeah.
this went above that? That's a closed order. There's money here. You see this went above this wick but didn't go above that wick? That's an open order, open order, open order, open order. You see, and nobody's teaching that. You see what I'm saying? I'm the only one reading it that way. I have not seen anybody read it this way. Right?
That's why I'm asking questions, trying to understand it
like
more.
nobody. Yeah, like intricately. I was staring at it over the weekend. And I was like, I'm noticing something here. It's a language, and I always say it's a language. I've been saying that, but it's a language, and it's crazy. The more I look at it, the more I see it in everything. And the thing about it is it's not about you know you know where it's at miscellaneously. It's about where it's at the beginning of the session or leading into the session, like right here, right? This move stopped out these buyers, that buyer, right? But then during Asian, it did this. So I'm reading what happened during Asian. And then New York starts here. So now I can get an idea of what orders are left open. Do you see what I'm saying?
Right.
This one, that one's open. But the market pulled back in a what? Higher high, high low formation. So there's an order here, here, and here that hadn't got stopped out yet. And where's the market? Way up here. And what are we doing? We're trending down. So where are the open orders at? And where's the market more likely to go? Is it going to go take out an order way up here? No. It's going to take out the order below, here, below this wick, and below that wick. And what are we doing leading into New York session? Are we bearish? Is the daily candle bearish? Is the 4-hour candle bearish? What is the likelihood of it going to take out this order? Because this is an open order right here, but we're not trending up. There's an open order right there. I don't know if there's a wick above this. Yeah. See how that didn't close above this? So that's an open order. So it could go higher, but we've already showed bearish momentum, right? And we didn't break above that high. So that's not showing bear. That's showing rejection. So where are we going? To take out these orders. You see what I'm saying? And then if it pulls back while you're watching it, then you're identifying new orders, right? There's an order here and an order that didn't get taken out yet. That's not lower than this. There's another order. Here's a break of structure. And now you got your pattern. Low, high, break of structure, next phase tricked by order, leftover order, and we're trending down. You see what I'm saying? See how it's a language? And if you read it into the New York session, like say you come to New York session and you miss this move, well, you can't trade because I say you don't enter trades in a push phase, right? So you got to wait for that to come back or risk going into drawdown. And sometimes it does keep going tough titty. You missed it. Or hope to God it comes back and fills its imbalance and creates an order. But remember, the main order didn't get taken out yet, and we are in the downtrend, And then there's going to be some days where it's going to be hard to judge where we're consolidating. This is going to, these days suck, Those are the days that suck, But, if you come down in here, 200 moving average is in between price, so you shouldn't be trading anyway, right? So but like I said, I don't know, on the call who's been staring at the chart long enough to catch this. So like I said, this was not a novice training, but if you've been in the class and I talk about liquidity all the time, this is taking it to another level. Right? This is taking it to another level. You notice that I keep showing the naked chart because I want y'all to understand that I don't trade just using the system. I only use it to confirm an analysis. That's it. That's it. I don't trade it I don't use it to trade for me. I teach an understanding of the market, and then the system just confirms, right? It's not a magic pill, right? So I don't want to sell it that way, but that's why I say when people ask me, are you selling your system? I'm like, no, I teach a strategy. The system just helps confirm analysis. That's what I say, right? I'm not showing y'all, no bullshit here. I want y'all to understand that I use the system to help confirm because I still lack the confidence to place a trade with a nice size lot size. Sometimes I'm still scared. I want further confirmation, right? If you asked me today, if I wasn't biting my nails, trust me, I was like biting my nails on NAS 100 today. I was like, because I had almost full margin. So, trust me, I'm just as scared, but I back tested over the weekend, not a lot, but enough to trust that if I saw open orders, it should take it, and it went right to it. I couldn't believe it. It went right to where I said, and if you go back and watch the video of NAS 100 of US 30, the one I posted before this move, I had green arrows here and one right here. Go back and watch the video that I posted. So I ain't lying. I had an arrow here, one here, one here, and one here, I think. I know I had one right here because that was my first target.
Yeah.
And it went right to it. I'm telling y'all, I took the trade down here. My goal was to get to here. That was the goal. I was like, I'm only going to get that. That's good enough. And I left and I was like, I'll leave a runner. I left the runner. I didn't hold US 30. I held NAS like a dumbass. I should have held US 30. NAS was the one I held. You see what I'm saying? Because NAS was a no-brainer because it's 200 moving average on the daily time frame. This one I still wasn't sure because the reason why I wasn't sure because I was like, watch, it's going to do this, fill the gap, wick, and then take out all the orders below. That's what I thought was going to happen. I thought it was going to be, I thought FOMC was going to happen, and then it's going to take out the order below here, and below here, hit this, and then maybe go back up. That's what I thought was going to happen today. So I was like, nope. Especially when I saw this and I saw this candle, I was like, watch it drop again, and I was like, nah, not even going to try to risk getting back in that. But that's what I thought was going to happen, because it just filled the gap and it hit this, it filled imbalance, and then this started to happen. And I was like, it's going to drop. So I didn't hold US 30. Like I said, I'm just scared, And then if you look at the daily time frame, it was clearly going up. It looked just like NAS, and the only reason why I was scared is because of how far it came down. It came all the way back down here, right? At the time, before this not that candle, this candle. No, it was this candle. At the time, it came all the way back down here, and then showing all this hesitation. I was like, I'm not sure, but that's that.
All right, thank you.
Yeah, man. All right. Anybody else have a question? It is 9:06, so I'm definitely late for where I was going to go. I was supposed to be watching football, but all right. Let's just see. Inside this chat, this black line. Black line is 200 linear moving average. Whoever asked that, it's linear weighted. Just how than an open order. Is it better to just go in and grab your 500 points, exit the day ahead? I'm not gonna lie. If you go for 500 points in US 30 and close your laptop, you could do that every single day. If you sit there and try to trade all day, trying to catch a quick 500 here, 500 there, 500, unless you're just really good at it, I'm telling you, from experience, it always ends up being a losing day. If you just, and that's me. If you're just scalping with minimal analysis, you're seeing things line up, and you're like, I'm going to take it. It always ends up being a losing day. I'm telling you. Because like I said, you could take this one right here and hold it. That's 1,000 points. You could have been done at 500, right? But you held it. Now you're losing, and then it goes up on you. It's just like I said, that's why I said 15-minute time frame is goal for 500 points. Between 400 and 500 points if you're going to trade outside of the band and then the retest. My advice is get an understanding of the price action of what I taught today, and then take it to the boss money template. You'll make better choices. I'm telling you, you'll make way better choices. All right. All right. Thanks so much. Learned a lot today, especially the template with the 200 hours. Cool deal. All right. Like I said, before we end this, anybody else have a question? Anyone? Does anyone want to see this on a different pair? I'll go over it on a different pair as well. I did it on gold. Usually people love gold, but I ain't doing gold again. But if there's any other pair that people tend to trade, I know GBP USD. I know people trade that. I don't know how this moved today. It tends to look like GBP USD. But just to show you, what I would see open orders wise leading into today. Granted, this one will probably be hard because I decided to pick this one as my last one. Let's see. I guess this is the day, right? Yeah, that is the day. All right, so this one. All right, so 4-hour time frame. I can just draw a line right here. We're below the 200 moving average, so we know we're trending down. All right, so look. All right. All right, so this is the biggest move, right? So what did this take out? Didn't take that out, did it? No. All right, we'll double check that using the crosshair. Okay, nope, didn't take it out. So there's an open order above here and an open order above here, right? Market pulled back. Yeah, all these have gaps, all right? Close that order, lower low, lower high, lower low, lower high, lower low, lower high. So open order right here. Open order. Open order above that wick, right? There's an open order above this wick. right? And so we know everything below here has already been stopped out. And we know that all of this is open orders. Nothing has stopped this out yet, right? So we can draw a line from here to here, which lets us know that below here is an open order, right? So that's an open order below here. So basically what we'd have to do is just decide on, where is the market going from here, right? Are we going up to take out these orders, or are we going below to take out these orders? This one's tricky because we are in a downtrend. So low, let's say that's all high. And then you have inefficiency up here. All right, so then we had a breaker structure right here. So let's go to the lower time frame. So this is going to be one of those where you're going to need to see a breaker structure to the downside before you make a decision because of the structure. Now, leading into today, there really wasn't much going on today, was there? Yeah, so there was a move to the upside, move to the downside. So I don't even know. I keep forgetting this is GBP JPY, so it's not really a New York pair. So the price movement in New York is kind of weird. I don't even know where I would place a trade on this one during New York, leading into New York session. This one's not. I don't even want to go over this one. But where I think the market is going to go from here, right now, I'm going to say breakup structure, right? And then the only way for me to take a trade to the downside towards these orders, because like I said, that's going to be an open order. This is going to be an open order. Is we need to break below. We need to see a breaker structure. This is higher high, higher low, higher high. We need to see a breaker structure. An order be created below this, and then we'll have orders to trade towards. And you most likely will get equal lows right here. So unless I get this, I'm not trading to the downside. If I say bullish momentum, I'll trade toward these open orders, toward the inefficiency that's up here. All right. And like I said, overall we're bearish, but does not mean that the market is done doing its, pullback, because this is what higher high, higher low, higher high, higher low, higher high, higher low. Because like I said, we didn't break below anything significant yet. This is the significant, not this little stuff in between here. This is the significant low to break below. We didn't break below that. So, two scenarios, see if we break past this, we see bearish momentum, we'll trade towards this order and collect all the orders to the left, right? Fill in this inefficiency most likely, or not. But that would be my analysis for this, for GBP JPY at that right now. But this, like I said, this one, as you can see, once you identify the open orders, it's just you wait for the specific scenario to play out, and then you make your decision. Right now, it's just not the time yet. During London, we'd probably be able to make a decision on where this is probably going. Like I said, we did feel some inefficiency right here, so all the open orders below here could get tagged because we're all overall in a downtrend, right? Overall, and this is a pullback, and now we're doing lower low, lower high, lower low, lower high, lower low, lower high, and all the orders below here could get traded toward. We just need to see confirmation right here, or we need to see if the market's going to hold bullish momentum to fill this gap, and then maybe drop or break structure above. Just but right now we've got to sit on our hands. It's kind of in a no man's land. So might not have been the best example, but that's how we analyze that. By identifying the orders that were closed and the ones that were left open, plain and simple. All right, this should be a red line. All right, and now it's just a waiting game because we're out of session. But that would be my analysis until we're in session. So you wait for London and see what happens. All right, keep an eye on that. All right. All right. So hope this helps. And I hope you guys, you know, are able to, you know, mark up your chart and get a better understanding of this. Just back test it, guys. You know, if you think you're doing it wrong, send me a picture of it, and I'll, you know, from the picture, I might be able to see. If you're wondering how to get to those arrows, just click insert, go to arrows, and then use these arrows to mark your chart. But like I said, this was game changing for me today. I never trade NAS 100. I got the biggest trade of the year on NAS 100 today. I never trade this pair. So, you know, that's that. All right. But that's going to conclude today's training. Hope you guys got, you know, a lot of value out of this, and hopefully the rest of the week goes well for you guys.
Thanks, Jared.
You're welcome.
Thank you, Joe.
Yep. Have a good one.
Thank you. Thank you.